Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. And thank God it's Friday. It's Friday, January 11th. We got just one item here for economic news release scheduled for today, and that is the trade deficit for the month of November. We had a 42 billion in the deficit for the month of October. The forecast would be to improve a little bit to 41, and it went all the way to 48.7. So a huge transition to the other direction. So we got ourselves further in hole, or with the deficit here with our trade. So let's go take a look at the headline news here. Again, today is going to be kind of a quiet day. Next week we'll get a little bit more. Monday, Bernanke is going to be speaking. But other than that, there's nothing scheduled for Monday. But later on in the week, we'll have like retail sales, we'll have PPI reports, CPI reports, Philadelphia Fed. So we'll see the manufacturing Philadelphia region. We'll also see consumer sentiment. So those are going to be a pretty important news for next week. So be prepared for a little bit more volatility towards later in the week from Tuesday on. So right now the stock market's currently up. They're not up a lot, but it's starting to get spooked a little bit as a few earnings came out, like Wells Fargo. Their margins weren't as high as they'd like it to be, and they're concerned that that could be they're the first financial. And next week, some more financials will be coming out on the other financial industries. That maybe that might be a result for a trend for the rest of them. So a little bit of concern on Wall Street in that aspect. Also, there was some reports that China came in with their like their version of like the CPI, where it came in a little bit higher today. So what that means is that spelled inflation wrong. Sorry about that. What that means is that because it's a little bit higher inflation, they're kind of forecasting that China most likely, if inflation does continue that trend, that China probably won't be raising or dropping rates anytime soon to try to stimulate their economy. So if anything, later on, they may even obviously go the other direction. Now, speaking of such, as we've seen about a week ago with the Fed minutes came out, that a lot of these members that are on the voting members were like to actually see us stop buying it. And then there's even one person that came out, the new one for the Missouri one, even came out and said that she's already looking at selling. They're concerned about the balance sheet of the U.S. about selling the mortgage-backed securities. So because of some of these new transitions here, and people kind of feeling that maybe we're kind of turned our corner, that maybe the economy is getting a little bit better, there's a lot of concern. Talk now that instead of maybe getting better rates, that rates could be going up a little bit as a result, because the Fed has been artificially keeping the rates low, and that they may pull back on that. So be prepared to watch for that, and we'll kind of move along. So speaking of rates, we'll just jump over there now, see what the mortgage-backed securities are doing today. Now, this morning, don't get freaked out. This is where we left off yesterday. We had kind of the star effect here, but we dropped about 33 basis points, and because we had a bond rollover. And essentially, what that means is that every month on Wall Street, they package these bonds up over a month and then they resell them. That's why we have like 30-day locks on our mortgages. So it doesn't mean that pricing changed on this. It just means that about 27 basis points of those are just drops, and it's going to be the same, the interest rate. So it didn't have an adverse effect on the rates. It basically, you could take it with a grain of salt, basically. All right. So with that said, rates are basically about where we left off yesterday. There really wasn't a change where we are. We're down maybe about that 6 basis points where we're currently at. So I wouldn't really fret too much about it right today. This could change. Obviously, next week will be a lot more volatility, so expect that. So we'll just leave it for that today, and you guys have a wonderful weekend. Thanks for stopping by, folks. I hope you guys have a wonderful upcoming weekend here. And if you guys like to see these on a daily basis, just stop by Mike's Daily Market Report and take a look at you can receive these on email. There's upper right-hand corner, you'll find the subscription, and you can just put your email in there, and we'll have these emailed to you on a daily basis. We don't share that information. We don't even email you anything else, but every time I upload one of these videos to the blog, you get emailed with that blog. All right. Have a wonderful day.